Hey everyone, and welcome back to Part in the Price Action. I am JC Parets, and I am joined by Steve Strazza. Let's get into it. So Strazza, the transports are at the highest levels since July. Is it their time to shine again?
I think so. It would make a lot of sense. First, we saw energy take off when crude oil broke out. We saw financials go when yields took off. Now we're seeing some action from materials and industrials, and I think the environment is ripe for some rotation in transportation.
Listen, I think you nailed it. We saw it in energy. You're seeing it in financials, higher interest rates. If all of these cyclicals are going to go, do you think that they're going to go without the industrials? Can that happen? Of course, anything can happen. That's not the bet that we want to make, right? To your point, if the other cyclicals are going, I feel like it's only a matter of time before the transportation index, which, by the way, all of those stocks in the transportation index are in the S&P industrial sector, XLI. And then from a broader standpoint, if the industrials are doing well, what does that say about the broader market? To me, that speaks to strength. And we're going to talk a little bit about that further on in the show. But that's really what it tells me. If we're going to have a strong market, industrials have to participate.
Yeah, I mean, if transports are working, industrials are very likely participating, and above that key $99, $100 level, that would be a bullish development. And I would say keep an eye on XTN too. The equal weight transportation index has a lot more than just 20 transportation stocks, and it's closer to all-time highs. It looks like it's breaking out as we speak.
And there's so many charts that look just like this: a breakout out of a huge base, a consolidation right at a key extension. Like you said, if it's above 90, this one is off to the races. Next topic.
Nice bear trap. All right, Dr. Copper. We've been watching copper closely as it's consolidated since about May now. Looks like we might finally have a resolution. Are you buying it?
How can you not? I mean, listen, we've seen it in other areas. Look at tin making new highs. Look at aluminum making new highs. When you look at our equally weighted base metals index making new highs, here we include iron ore, lead, zinc, tin, nickel, steel, aluminum, and of course copper. But what this does, this equally weighted index, is that it eliminates the whole copper effect. You know how like Amazon is a big percentage of the consumer discretionary space? In the case of copper, like we can overthink copper, but if we look at what the others are doing and they're looking great, why should we be surprised that copper is also participating? That risk reversal a couple of weeks ago in Freeport-McMoRan, boy, that might turn out to be the best trade of the year.
Yeah, that was awesome. If crude oil wasn't such a good trade, it might be up there.
Touche. Fair enough.
I couldn't agree with more with what you're saying, and that's part of what kept us bullish this whole time. Copper's been going sideways since May, but if you look at a chart of aluminum or tin, we saw not just resilience, but continued strength from base metals and industrial metals this whole time. So it's not shocking. It shouldn't be surprising to see copper joining the party. Maybe too many people put too much emphasis on copper alone. There's a lot going on in the industrial metals complex.
And when you really zoom out in copper, and if we start breaking out of this 10-year base and copper is looking at potentially $6, $7, $8, is the world ready for that? My argument is no.
And what's crude oil doing in that environment?
Exactly. 120, 150. Right.
What's the dollar doing?
You'd think it'd be getting crushed, right? But that's another conversation.
It's for right now.
All right. So next topic. Speaking of the US dollar, the dollar is back at the top of the range. Are we going to see it break out or roll over, Mr. Strazza?
I would just say that the breadth in the US dollar was a lot better when it first got to the top of the range a few weeks back. It's been shopping around here for a while, but under the surface, when we look at how it's been performing versus other currencies, it's really just the euro and the yen that have been weak and that are kind of, propping the DXY index up. I would argue with the weight of the evidence and what we're seeing from cyclical assets and risk assets, plus the fact that the dollar's rolling over versus too many other currencies, I would say it rolls over here.
I like this G10X US dollar, looking at all the other ones showing a divergence. If momentum was on here, you'd see a bearish momentum divergence in the dollar at these new highs. I think it's interesting that with new highs in the dollar, you're not seeing new lows in gold. Is gold giving us a heads up that something's changing in the dollar? So to your point, there's a lot of different things going on underneath the surface. You were talking to an associate today talking about the lack of strength in emerging market currencies. I think if we're going to get that global rotation, I think those emerging market currencies need to participate, and you got to be seeing overall dollar weakness in that point, right? And I think you're already seeing it a little bit, aren't we?
With commodities doing what they're doing, it would make a lot of sense to see the dollar roll over here. Again, they've trended higher all through Q3, so maybe that continues to happen.
And you can argue that maybe we're just seeing a complete dislocation in the correlation between the dollar and commodities, and people are certainly making that bet. That's just not a bet that I want to make that is going to be sustainable. I think that there's some sort of mean reversion back to traditional relationships. We haven't seen it quite yet, but if we're going to make a bet one way or another, is the relationship over or is it just taking a pause? I say that the couple's going to get back together soon.
Well, luckily, I think history is very much on your side.
Yes, right.
All right, Bitcoin tests highs. So it's definitely not acting like a safe haven as it's rallying to new all-time highs with other risk assets lately. What's your take on crypto here with Bitcoin back up at those all-time highs?
Yeah, if you think Bitcoin's a safe haven, I want to know what you're smoking, and I'll give you my address. You can send me some. Happy to. So there's really nothing safe haven about Bitcoin. You know, what I'm seeing is all-time weekly closing highs for Bitcoin. It's like, well, JC, the market never closes. Thanks. We can use 8 p.m. Eastern time. We can use midnight, whatever it is, all-time weekly closing highs. And then to your point, sure, technically it made new highs, but it's right there, right? We're waiting to see the breakout. I'm very curious to see how long it takes demand to absorb all of this overhead supply in place since, what was the peak? Was it in May, the peak in Bitcoin?
May.
Yeah, in May. I'm curious to see how long it takes. How long do you think it takes?
I'm looking at the altcoins. I mean, I think it could rip right through this supply level, but if the altcoins were doing better underneath the surface, I'd feel better about this whole thing. Seems like participation is a little bit lackluster, to say the least, right now. So,
yep, and you could see it in the Bitcoin dominance chart where you just see the sheer outperformance, just resilient outperformance out of Bitcoin since last month. The strength we're seeing in Bitcoin, you're just not seeing it in the other areas. We talk about these monster bases like Algorand and Elrond and Avalanche and Cosmos, but we haven't seen the breakouts. But if Bitcoin goes, you know, I have a hard time believing those others aren't going to go as well. But it goes back to, you know, old lessons, learn the hard way. You know, focus on what's in front of you. Trade what's in front of you.
Yeah, you wanted to be in Bitcoin for this past month, that's for sure.
For sure. Right. My turn. Confirmation for rates. We're seeing rates moving higher across the globe, not just in the U.S. Do you think that it is here to stay? I know the
Definitely. They're moving higher across the board. You're seeing the long end of the curve break out. The short end of the curve is now breaking out. We're seeing inflation expectations being priced into the market, whether you look at the TIP IEF ratio or anything else. Just seeing the 2-year breakout, a lot of people are like, oh, you know, the curve is flattening now. I don't think so. I think that's like more of a mean reversion move when you look at spreads. And at the same time, if investors are going to price in the expectations of future rate hikes, then you're going to see the short end go. So it shouldn't be shocking to anybody. It's probably a good thing.
Yep, and the intermarket relationships, we're seeing the same thing, right? So if interest rates are going higher, you're going to see copper outperforming gold. That's exactly what's happening. Gold kind of stopped going down over the last couple of weeks, but gold has really, copper has really broken out. So the relationship, copper outperforming gold, pointing to higher rates. Regional banks, obviously, we continue to talk about the strength that we're seeing in the banks, financials in general. And therefore, less of a reason for fixed income investors to buy REITs because they're getting their yield in the bond market. They don't need to buy REITs and utilities, which are really taking it in the chin. And it just, again, that copper gold ratio, you know me, I trust the bond market. I trust the macro intermarket relationships. I trust dogs and I don't trust humans. You know, they could either be lying to you or mistaken. You know, dogs aren't going to steer you in the wrong direction. Neither are bonds.
Should save that for the final word.
Oh, too short.
Hot take.
All right.
First thought. This is a game that we like to play where we say the first word that comes to mind. Today's phrase is risk appetite.
Listen, for me, risk appetite, I have to think high beta stocks are outperforming low volatility stocks. I have to think Aussie yen making new highs. We saw that before copper started moving. Talk about information that we're getting there. What about credit spreads? The fact that junk bonds are outperforming treasury bonds. Crude oil making new 7-year highs. CRB index and crude up 8 weeks in a row. You know, uranium breaking out. Like, none of these things, consumer discretionaries outperforming consumer staples, new all-time highs in the ratio. None of those things are consistent with a market environment where things are about to fall apart. Quite the opposite, Mr. Strazza. What about you? What do you think?
I mean, you pretty much stole everything I was going to say, so good job. But no, I would add stocks versus bonds. Keep it simple. We finally got a resolution higher in SPY TLT. That's another big one. And just cyclicals assuming leadership is not something you would see in a risk-off environment. And the yen continues to get destroyed with other defensive assets. So, yeah, risk appetite, I think we're seeing it.
Yeah, no doubt about it. Yen getting killed, all of those things. We're waiting for the dollar to roll over for that last check mark of risk appetite. Let's see if we get it. All right, so now, Amin, put it up. The 2-minute drill. Do you have exposure? Mr. Strazza, commodities and cryptocurrencies have been the best performers over the past year. Do you think investors have enough exposure to these asset classes?
Definitely not, especially if their money's with an RIA. It's just hard to gain exposure to both of these asset classes right now. I was on Twitter Spaces a few nights ago, and that was the topic. Just how difficult it is to get exposure, what vehicles you could use if you're only using the equity market. And I think we just had 6 new funds hit the market today or yesterday for Bitcoin. There's plenty for commodities, but some of these ETNs, they're just not the best vehicles to gain exposure to the commodities market, which I think is a problem. Maybe some come on the market because this is a new commodities super cycle. We saw so many leave the market over the past 15 years. I don't know, but it's a problem, and it means incremental buyers and higher prices, in my opinion.
You want to talk about a tailwind, Strazza? The fact that American investors, I mean, listen, all countries, people have home country bias, right? But our home country bias specifically eliminates commodities. I mean, you look at the S&P 500, less than 3% exposure to energy. When you look at the NASDAQ 100, 0% exposure to energy and commodities. You know, American investors just don't have that. When you just look at the relative performance of energy stocks relative to the rest of the U.S. market, it's just been an absolute disaster. So to me, 2 things. How much upside do we have price-wise? And what's the catalyst? Nobody's in it. How many portfolios are positioned for oil at 150, 200, 250? Why can't it go there? I'm not saying it is, but why can't it? And portfolios are certainly not positioned for it. And then when you look at Bitcoin on a relative basis, you know, you're looking at a $2 trillion market, all cryptos all in, when you're looking at a $200 trillion market between bonds and stocks. So you're looking at 200 trillion in stocks and bonds, and you're looking at 2 trillion in crypto. You know, that's nothing.
Sounds like a little catch-up trade is there.
You kidding me? Huge tailwind. All right, final word, Mr. Strazza.
I was just going to say it was nice seeing you guys last week. It was nice seeing everybody, but it was really nice being in the Northeast for the fall. Missed that. It's hot down here this time of year. It's hurricane season, so that was lovely. It was nice seeing you too.
Yeah, I'm sure. I just want to say how happy I am that it is now basketball season starting this week. I have had a rough go at it at football season between the Miami Hurricanes and the Miami Dolphins. We just can't mix in a win no matter what. So thank God that basketball season is here, because I think sports are a great place to get your dopamine fix. Don't get your dopamine fix in the stock market and in trading. Go get it somewhere else. I get it by frustrating myself with sports. You could be a hunter. You could be a marathon runner. You could go, I don't care what the hell you do. Just don't get your dopamine in the stock market.
Well, you picked the right sports teams if you wanted to be frustrated this year. So good job.
Heat looked good. Miami Heat looked good. So I'm looking forward to that. All right, guys, that's another episode of Pardon the Price Action. Thank you, Mr. Strazza, for joining us, and we will catch you next time.